A very good morning to everyone. Welcome once again to Rally Trade and Rally Academy, where we make daily profits. So this is the morning market review. My name is Victor, and I'm going to be your host today for the review. Welcome back from the holiday. I know we had yesterday, but from me, welcome back. Meanwhile, the market has not gone on holiday as you. Good morning, Mr. Felix. Nice to have you here again. The market didn't go on holiday. You can see, in fact, the market is moving very well. For some people, yeah, they are making good profit off the market. And to be honest with you, I know of some other persons who are not really enjoying the market at this time. But you see, it's everything happening in this market is just a game of numbers. Some make profit, some lose. But if you do your due diligence, then you should, be on the side of the market where you're expected to make profit. So let's see the opportunities for today, the market movement for today, and let's see how we can maximize profitability for today and for the rest of this week, right? So let's dive here. But before we go to our charts, good morning. Before we go to our charts, I'm sure everyone can hear me. Just a brief look at our fundamentals for today. Please, if you can hear me, just drop a yes. Okay, thank you so much. I think we just have a few persons on the call, and not much yet. So please, for those of us here already, just a few minutes, let's say in the next 2 to 3 minutes, to wait for others to join this call so we can start. All right, please, just a few minutes, 2 to 3 minutes. Let's wait for more persons to join this call so we can officially kick off. All right, thank you so much.
Hello, Mr. Victor. No voice, please. No audio. We can't hear you.
Yes, I wasn't talking. I actually craved the indulgence of people who were here earlier for us to wait a few minutes for more persons to join in. So that's why
Okay.
I wasn't talking actually. So
Okay.
we're
You're
just trying to
welcome.
wait for persons to join. But I think the wait is over. Let's just forge ahead. Every other person will join us. Thank you. Good morning once again to everyone. Nice to have you here. So for today being the 23rd of April 2025, now basically you can all tell that the market has been volatile. That means there is massive movement in the market. Now this movement can be to your advantage and some persons to your disadvantage. Now the truth is, whatever you are seeing on your chart is not 100% a form of your technicals again. There are still some underlying fundamentals that affects the charts, all right now, underlining uh, fundamentals that also just come to play and affect the chart. Meanwhile, these fundamentals, not all of them are captured in Forex Factory here. Not all of them. For instance, now the US tariff, still affecting the market. We are still seeing the effect. But let us look at what we are expecting, at least those ones that we can see on our Forex Factory. So for today, we are looking at, in a few minutes now, just a few minutes now, we're expecting the French flash manufacturing PMI. Basically, this is like for the manufacturing industry. They take a survey of manufacturers, and it's the whole idea is to check if there is expansion or contraction in the manufacturing industry. So what the forecast is for 7.9. Now, basically, anything below 50, right? If we check it out, anything below 50, let's see. All right, so level of diffuse index based on surveyed purchasing managers in the manufacturing industry. Now, above 50 indicates industry expansion, below indicates contraction, right? So basically, if it is above 50, it means there's expansion, the industry is doing well, there's a lot of activities. But if it is below 50, then there's contraction, not doing well. The manufacturing industry is not healthy. Hence, the last time we had was 48.5, which was actually bad. So we are forecasting 47.9, which is even still not really good enough. Now, generally anything below 50 is bad, but if it's now below 47.9, it's even worse. All right. And then the euro will lose strength. But above 47.9, let's say from 48 and above, yes, it's not good enough, but the euro might just retain some of its strength. All right. So, and you can see that we have 1, 2, 3, 4 of them coming out. Okay, 2 of them by 9:15 and 2 of them by 9:30 a.m. this morning. So it's more all about the euro early this morning. Then by 10:30 a.m. which is now, all you need to know is that everything we are doing is minus 1 hour. Right, the daylight savings now are minus 1 hour. So you will notice that if it is 9, so it's going to be 8. If it is 10:30, so it's going to be 9:30. So by 9:30 local time, we are expecting flash manufacturing PMI. Also, the same thing for the Great British Pound. So, like I said, anything below 50 here is bad. But at least since the forecast is 44, anything below 44 is bad. And here, anything below 51.5 is bad. Anything below 44 is worse. Let me put it that way. Okay. So basically, actual greater than forecast is good. Actual should be greater than whatever you are seeing as a forecasted figure here. Then I'm just looking at for the red envelope events, which are the major fundamentals we expect. We call them high impact news. Okay. The flash manufacturing PMI for the USD, this is going to be by 2:45 p.m. today. All right. So from then we can expect some volatility in the market. Then by 6:15, the Bank of England, Governor Bailey will be speaking. This is not a data news. This is just it's a speech. which can be interpreted by economists or even possibly analysts. So with this one, you might want to stay out of this one, or if you want to trade it, be very careful in trading non-data news. You don't have real-time data, whatever is happening. Notwithstanding, we're expecting volatility. So let's see what the market is most likely going to do for today. Let's start from the USD JPY. Okay, GBP JPY, in my own opinion here, price has been tending to the downside. Like it has been trending massively to the downside, and this has been happening. No, let me see. We first of all had a range, a massive range, which has been for a long time now. This range, this is the lower part of the range. So let me see. Okay, since let me say this high, for instance, here. Since 2024, October, we've been having this massive range. We had the highest part of the range, and we have the lowest part of the range. Right? Price has been trapped inside of these levels for a long time now. Price has been trapped here. Now, this is the more like the extreme point. Anything above here is like the extreme level, which price doesn't stay for long. Here also price does it. Okay, so now that said, GBP JPY has been struggling to really go to the upside for now, and we can see that price if you look a bit smaller, so you see price is finding it really hard to break out of this. So price is finding it really hard to break out of this zone. And last night, price retested this zone again. You can see yesterday, just before market close, we had this massive impulsive move to test this particular area again. So in my own opinion, price should keep, pushing to the downside. I expect price to continue pushing to the downside. You can see at least to these lower levels here. There's a lot of liquidity here which price needs to sweep, and also this level which it needs to sweep. If at all it needs to go up, first it needs to go down. All right. So let's see. This is how you should expect price. If you expect price to go down, before this downward movement, you should see some upward movement first. And if when you're expecting price to go up before this upward movement, then you should expect some downward movement first. All right. So now this is basically the principle price follows to move. So for us to have this downward movement, we've had some upward push. Yes. Now we are waiting for that downward push also. And if price really wants to push lower, then it breaks this zone and comes even to this extreme zone. Now, even if it doesn't come to the extreme zone, at least if you get to this level here, if you are shorting or selling GBP/JPY, you should be able to make some good profit all the way to this level here. So I think GBP/JPY is straightforward. It's coming from this massive area of supply, which has formed a strong resistance level for us. Meanwhile, there's still a possibility that price can break out. I don't think it's right now. If price break out, then we have a long way to go. Right? Look at the high. We have a long way to go. Meanwhile, this is not the extreme zone. This is just where price can play. Like where price can just do the normal movement. This is the extreme zone. All right, if we zoom out, this up there is like the extreme zone. Let me show you. All right, you can see that that's the extreme zone over there. Okay. So price, once it breaks out of this level here, then it has a long way to go, like a really, really long way to go. Okay. So GBP JPY, we are looking at shorting price this morning. Then are dearly below. See, is this Euro USD? Okay, good. Euro USD. Euro USD right now. The dollar is down, so the euro has some edge. Meanwhile, the euro has the advantage right now because if I let me take this out. This has been on the upside, right, for a while. This is my 4-hour time frame. This is my 4 hours time frame. Price has been massively bullish. Okay, massively bullish for a while now. Like massively bullish for a while now. Let's see. I don't think my trend line can give me something good here. Okay. Really fitted down here. Okay. So the Euro USD has tended massively to the downside. This is my 4-hour time frame. And since price is bullish, so if price is overall bullish, right, you know that price will not just pull up. Let me start from downside. You know that price wouldn't just go like this. At some point, you expect some level of retracement, right? Price will retrace as usual, some retracements. Now, sometimes it wouldn't just retrace. Sometimes you'll see price just a little or even range, after which price continues that upward movement. Okay. Now, we don't want range, we need retracement. Okay. So inside of that retracement, another retracement, we are looking for opportunities to go long again, to keep buying, given that we are overall bullish. So price has that upward momentum. Okay. So for instance, now how do I look for areas where I can buy from here? Now, some persons are of the school of thoughts. You know, what you were told that when price break resistance, for instance, this is a resistance level, price break resistance, resistance becomes support, right? Yes, it's true, but not entirely true. So this is a resistance now. Price broke resistance. Did resistance here become support? No, no, it didn't. So it's true, but not entirely true. It's not always the case. Meanwhile, there are times where after price breaks resistance like this, you will see price goes up, it comes down, taps this level here, goes way below it before continuing that movement to the upside, right? So there's no general, formula to it. But one thing I've noticed that usually happens a lot is, so check this out. Now, when price goes up this way, when price goes up this way, just take note of this pattern. You might need to go back to this video on YouTube. We are currently live streaming on YouTube also. So you find this video on YouTube. You might need to go to YouTube to check this video again so you can understand what I'm trying to say here, because I don't have time to explain, in details, but just get this. Now, when price is overall bullish, we have a pattern we are looking at. So we have the rally, it goes up, and you can have a base. Now, that's where price can slow down. This base can be in one of two forms. It can do the base in retracement, right? Or it can form the base as a range. After which, we expect price to pull up again. Now, there are times where price can do the retracement as really retracement. Okay, so either ways, you're expecting sorry about that. Okay, so either ways, you can have one of these two. So we call this the rally base rally pattern, all right? Rally base rally pattern. So for instance, we have the rally base rally. We have this base. Now this base is 2, 2 in 1, 1, 2. What forms the base? The base is usually formed when price slows down. When price slows down, it's a reference for where we need to continue buying again, right? It's a reference for where we will keep buying again. So let's check this out now. Let me take this out. So this is how we apply it. So I have this rally. Let me make it big so that you will see clearly. So I have this impulsive move rally. I have this one candle here that is bearish. Yes, it's not strong enough, but it's still a base. Then I have a continuation. Then I have price slow down here, which is still a base. So what I do is I'll mark the top to the bottom of this bearish candle. Remember what I said, before price goes up, it needs to come down, right? So since I'm overall bullish, I want to take note of where price slowed down or where price dropped a bit before it continued. So I mark this area. What I would have done is, in case price comes back, this is where I'll be targeting to keep buying from. That is on the condition that price taps back. I'll keep buying from here, all right? Now, price did not tap back. It didn't, all right? So we continue. Now, I have this point here again where price pulled up, slowed down, okay? Now, I'm just showing this pattern. Once you understand it, then we'll move to other charts. We just apply it and see how it correlates, where we can be buying from and selling from. Very easy. Now, price pulled up here, then it started to range, right? It lost that momentum, it rested a bit. So the bearish part of it, right, from up to down, something like this. I'll be looking at when price drops like this, this is where I'll keep buying from, right? This is where I'll keep buying from until price takes out this high. This is the high, this is the highest point to go to before I had, okay, this was the highest point to go to first here before price retraced. If you keep buying, price needs to take out this high to give me a new high. Now, the moment price gives me a new high, right, which is here, I will need to find a new zone. This zone might not be valid again. Price has gone beyond it. You know, might not be valid again. I need to find a new high. Now, you see this massive move? Was there a drop before this move? Yes. There was this 2 bearish candle before this move, right? So what I'll do is take note of those bearish candles, the high, top to the bottom, then I extend it to the future, right? You see these 2 bearish candles, 1, 2, from the top to the bottom. Now, after price went to this high, notice it came back into it. I want to keep buying from here because overall, we are bullish. Price is tending to the upside. So I'll keep buying from here, and I expect price to take out this high that I created from this move, right? We keep buying, we keep buying, we keep buying. Notice that price keep going, came back here, you buy, came in again, you buy, came in again, you keep buying until price takes it out. So this was where price took out this level, right? So we now have a new high. Excellent. Now, what do? You take note of where you have your base, okay? Now, inside of this massive move that took out that high, do we have a drop down before a pull up? We have massive zone, all of these sell candles, all of them before this massive pull up, right? Good. So let me adjust them. They are large. See from the top to the lowest one here, and you extend it to the future. So what do you think should happen from where price is right now? What do you think should be happening to Euro USD? Should we be expecting price to pull up, or should we be expecting price to pull down? Yes. All right. I need your response. Buy. Okay. Mr. Felix said buy. Who else? Please, I need your response, please. We are in this together. I'm not just doing this analysis on my own. We are doing this together. All right, we are doing this together. The difference between this and the other zones that we've seen is that this one seems more wide than this one and this one, but the same principle holds. Like I say, it depends on how price does it. Irrespective of how price, is still the same thing. Perms said buy. Okay, so guys, we know what to do on Euro USD. So basically, we're expecting price to keep pushing to the upside. Okay. All right. So you know what to do. All right. So you know what to do already. So Euro USD, we're expecting price to keep being bullish to continue that upward momentum. All right. Continue this upward momentum. Okay. So that's for Euro USD. Now let's see. Okay. So once you know what to do, just initiate your trade and that's all. All right. Now the only thing that can stop this guy from pulling up as expected right now is the fundamental. Right? Now, let's go to say GBP USD. Now, this guy has been doing some funny movements, basically. Okay, trending down, now massively trending up. Now, it's possibly giving us what like a double top around this is the high point. So it can be reference for the future. If I go to my daily time frame, okay, on my daily time frame, I'm just having a double top on my daily time frame. Just the double. Over and over and over and over again. All right. So this is what I mean. Let me make it big so that you see it clear. If we go from the past to the present, then you see exactly what I'm talking about. All right. So now check this out. We've been overall bullish, right? Now you see this impulsive move to the upside. Before this move, was there a push down? Yes. Up, down, extend it to the future. What do you notice? Price came back into this point and we continue pushing higher, right? Now, this was the highest point it go to before this drop. Now, obviously, now the technique is, so you ask, oh, if I'm buying, where do I take my profit? This is the ideal point to take profit at the previous high price created before it dropped. So if you keep buying again, you need to aim high. The moment it gets here, you can just take out a profit because it might get here on the trace again. So now price took out this level, right? Inside of this level, look for impulse and a drop or a range before the impulse. A drop or a range. Like I said, it can be either one of the two, either a drop before a continuation or a range before a continuation, right? So irrespective, they are all the same, right? They are all the same. Okay, so here now, let's see, after this movement, we had a range. You see this range before this impulsive move, right? Good. If I mark the top to the bottom of the range, or especially the bearish candles inside, you notice price came back. Oh, come on. A bit down. Okay, price came back, tapped into this level. We keep pushing high again and high again. So you can keep testing this over and over. Look at this bearish before this move. If you mark it and extend it, see the price came back before a continuation. All right, so now what do you notice? The last massive push to the upside is here, was here. It did one drop and it couldn't continue. Now it's dropping. Now, if we do the same thing, which is exactly very similar to what's happening to Euro USD right now. Very similar to what you are seeing in Euro USD. This one peers down. So what do you think will keep happening from here? What do you think should keep happening from here on GBP USD? Now, if you can master this particular strategy that I'm just showing you, right, it makes things a lot easier. Like, so much easier. You don't need to, trust me, trading is not as difficult as I think it is. All right. Good morning, Mr. DMA. Good morning. Keep buying. Okay, go long. So exactly. So this is GBP USD right now. So we can keep pushing to the upside. And as we are pushing to the upside, guess what? We have a massive risk to reward because price has a long way to still go all the way to this side. Now, not saying that price cannot return. Price can potentially return here and start that movement all over again to the upside. Whatever makes it breaks this level, perhaps fundamental, right? And we are expecting one around 0945 today. Okay, so just watch out for the fundamental. But all things being equal, we're expecting price to keep pushing to the upside. Okay, so that's for GBP USD. I think we've done GBP JPY, Euro. Oh, did we do what's this? USD JPY? I'm not sure we did that. USD JPY. I'm not sure we did that. Okay. We didn't do that. Now, just USD JPY is just like if you take Euro USD or GBP USD, you turn it upside down. Just turn it upside down, right? That's what you're going to have. Turn it upside down. That's what you're going to have for USD JPY. They are doing the direct opposite of what the first is doing. Now, this now from here will be massively bearish, like massively bearish to the downside. Okay, so it means that we are going to be looking for opportunities to sell. And remember, we've been doing up. Now, what if we are overall bearish? Then after which you can have some level of retracement, then price continues, or you do some range and price continues. All right. So this pattern is like more of the drop base drop pattern. Unlike the rally base rally, this is like a drop base drop pattern. Okay, for when we are overall bearish. So let's see. Since we are bearish, for price to go down, first price needs to go up. Okay, price to go down, first price needs to go up. So we look for areas where we have massive impulsive move to the downside. All right, massive impulsive move to the downside. So once we see massive impulsive move to the downside, we wait for price to retrace to that level, then we keep selling it. Let me just mark. Okay, massive move to the downside, price came all the way. Sometimes it might not come all the way, but here price came all the way. And so sometimes some other persons are school of thought that when price breaks support becomes resistance. True, but not entirely true. Remember when I told you about when price breaks resistance becomes support? Not always the case. Right? It depends if that base area, the base is more like most important thing that we are looking for out there. Like very important. Now, okay, let me just leave this support where it is. Okay. So coincidentally, when price broke this support, respected it here, came here this time around, broke it. Now check, before this massive sell, was there a buy to the upside? Yes. This buy to the upside, right? So the reason price respected, if I mark this buy from the bottom to the top of the buy and extend to the future, The reason why price respected this area after it broke, came here and keep selling was it coincide with where you have your base. This is a drop base, drop, small base, but drop. This base now went up. Unlike this one that was a range, just a flat line. Just a flat line. This one was like a little pull-up. Okay. So this coincides with where our point of interest is. So the moment price broke, it came back there, you can keep selling. So you would say price broke support and support became resistance. What if this base is not here? If this base happens to be up here, for instance, this base happens to be up here, don't be shocked that price will pull up all the way to this point before selling again. So if you get my explanation, right? So don't just focus on price breaking support and support becoming potential resistance in future. Not always the case. It happens sometimes, not always the case. And times where it happens, check it well. There's a pattern that forms around that area, like this, that made it to happen, okay? So if we keep going, let's keep going. So for instance, now you say, let's do this, for instance. Let's do this. Price broke support at this level, right? Now, where is the base? Where price ranged? This is where the base is, right? Where price ranged before this massive impulsive move to the downside. So it's not exactly here, unlike the first one that we did. That's why price went inside of this level before attempting to come back all the way down. So please note the difference. The major factor here is the base. So I think I would advise you to follow the business structure. The business structure is what will really, really help you. Sorry. Okay, so the basic structure is what will really, really help. So from here, what do you think should keep happening to USD JPY? Up or down? Up or down, guys? USD JPY. Okay. Now, you notice that if you really settle down to do your analysis, you'll find out that, oh, okay, this is not that confusing after all. I think I know where price should go. What's left is once you have it here, if you want to have your risk management, selling, just go and have your stop loss somewhere, you know, that is safe or something you can afford. That's all. Okay? That's pretty much it. Okay. Someone says, is it Euro GBP? Let me just quickly do that and let's move to other things like gold and indices. Okay, Euro GBP. Now, I prefer a chart that is trending in a particular direction. Okay, so, oh, okay. This was massively bearish. Now it looks like it has changed to become bullish. This bullishness is really, really massive. So you can see this resistance area, price broke, it has not retested that level like as expected. Okay, so now we just follow the same pattern we've been following since we are currently bullish, right? I hate it when price is choppy. I need distinctive moves like this. Before we, Geraldine, this is Nigeria, so sorry. Okay, so I think you have a contribution or you want to ask a question. All right, mute and please go ahead and ask a question. Please go ahead and ask a question. Good morning, sir.
Yeah. Thank you so much. I've been enjoying your analysis. But I don't know if you can analyze Euro JPY. The analysis I've noticed has been ranging for a while now.
Okay, Euro JPY.
Yeah, thank you.
Okay, so once we are done with this, all right. So Euro GBP. Now let's backtrack and see, we are still bullish. Okay, so follow our pattern. Our pattern, we need for impulsive move, inside impulsive move. Like I said, it can come in different form. Before this massive pull to the upside, we have this pull to the downside, all of this sell. All of this sell. You can see this way right there. So price has been bouncing off this level. Now you will call it support, but something created the support. So I don't need to wait for price to form support. I would have missed out. I follow the business structure. I would have been buying from here before you now say, oh, you would wait for price this to happen, before you possibly even buy from here because you have seen that here is now a support. But something created this support, which was this business structure right here. Since you are overall bullish, we have this business structure that created support. So I would have bought from here first. I would have bought here again, and I would have still been buying from here. All right. So if we move to current market price, so what do you notice? This should be a bit down, Okay, yeah. Okay. So what do you notice? Meanwhile, for every time we've been buying, okay. Now, okay, this is it. The first time it's got to this point, came here, took this high all the way here. Now, inside of this, we have this business structure. Okay, so we are done with this basically. So this is the business structure that price is respecting. You see this business structure before this upward movement, right? Good. It's just a little layer above what we have currently. Just a little layer above what we have currently. Okay, so price did this and took us into this level right here. So if you're buying here, we are expecting price to move massively all the way to this level. Okay, so Euro GBP, you know what to do. We're expecting price to keep pulling up, or given that our bullishness still remains. Now, there are two things. For price to change direction, if we have been overall bullish, like this, retracements, a continuation, retracement, and one more continuation, then all of a sudden you start to see range goes here, back to this high, drops again, comes back to this high. It might be a signal that price want to change direction. So they said the trend is your friend until the bend. Okay, the trend is your friend until the bend. Probably we might be at our bend right now. We never can tell. So the best trade is still to assume price is bullish, as in to keep buying. Okay. So Euro JPY quickly before we move. Time is fast spent. Euro JPY. Okay, I have Euro JPY here. Similar to GBP JPY. So yeah, we've been having this range, this range here, here. Okay. So price has been has been trading inside of this range. Based on Euro JPY, so where should the target profit? I just got to Euro JPY now. The last one was Euro GBP. Yeah, this is Euro JPY now. Right. So trading inside of this range, and inside of this massive range, we still have this range, and inside of this range, we still have this range. So we have a lot of internal structure and external structure. So basically, we don't need all of this. We don't need all of this. We don't really need all of this. What we need is to identify the overall direction. Now, like I said, I don't like it when price is ranging. I need price to be in a particular direction. It gives me much more confidence to take trade in a particular direction, because the only thing you can be doing from here is to sell when price gets to resistance and buy when price gets to support. I don't mean this support, I mean the main support all the way down, like, all the way down. And this is not even the all the way down. If you zoom out, okay, this is more like all the way down, right? So it's to buy at support, sell at resistance, basically. This is it's straightforward. It's just that just hope price keep ranging if you are doing that. But I can assure you that price will not do this forever. It will break out. Right? Okay, so Euro JPY price goes all the way up, then you can work its way all the way down again. So it's just ranging up and down and up and down. Then okay, so this is like more like muddy waters, right now. So gold is kind of very slippery, and because gold is it does more of reaction. It reacts to whatever the dollar is doing. Okay, it reacts to whatever the dollar is doing, and the dollar is doing too much. The dollar is just, it can be up, it can be down, it can be up, it can be down, you know. So it makes gold kind of choppy. So we don't have time. Maybe when we have, a lot of time, there are other techniques to trading things like gold, specifically indices. So like indices can be very, very sweet. But for you to enjoy indices, you need to do you need to have what we call patience, like some good patience. Okay. So gold here, hopefully price start pushing to the upside here from all of the sales that we've experienced, especially because the dollar is now down. Yesterday it was up, so we had this massive movement to the downside. So today it's down, so let's see if price can push back to the upside. So if we go to something like US 100, US 100, now you notice that price has been tending to the downside, my 4-hour time frame. But before then, we were overall bullish. In fact, we've been overall bullish on the daily time frame. On the daily time frame, we've been overall bullish, like massively bullish. Let me see if I can do it this way. Okay. So on the daily time frame, price has been massively bullish, but now you can see that price is actively massively bearish. So inside of the bearish, you have massively bearish, retracement, bearish retracement, massively bearish retracement, and the likes of it. So let's see how we can attack it. Let's see how we can attack it. So once price is doing things like this, this is where I start looking for my sell down before the buy, especially on my higher time frame. When it comes to indices, right, I do what we call top-down analysis, identify my key areas, because price will most likely respect those key levels from your higher time frame. You just need to now find a sniper entry on your lower time frame. So this is how, for instance, that I'll do it. Now remember the pattern that we are working with. Since we are on downtrend, for us to go down, we need to go up first, right? Before this massive downward movement, we had all of this upward movement, which is here. Now I'm doing this on my 4 hours, don't forget. Okay, all of this upward movement here, so you can understand why price cannot go beyond this level for now. Okay, it's because before this massive downward push, we had this upward push. Now, trust me, you want to pay attention to the strategy. It's easy. The only thing that makes it a bit complicated is the way price can do this upward push or downward push can come in different ways. So irrespective of how it comes, yours is to identify that, okay, this is the push before the main move, and this is where my point of interest is going to be. So this is the push before the main downward move, and this is where my point of interest is going to be. So if I'm to do it on a 1 hour time frame, if I want to refine it, right, I need to see candle. If I'm to do this on a 1 hour time frame, this was where I got my finding from, right? So on my 1 hour time frame now, if I leave, let me lay on it. This was the upward push before all of this sales started, right? So if I mark it here, here, and I extend it. So you see that I'm getting my sniper entry now. We call it big brother, small brother. And on my big brother, small brother. The big brother is a one higher to this one. Because to be honest with you, if you are to take a trade from the 4-hour time frame and you zoom back to 1 hour time frame, you notice that this zone is wide. The zone is wide. Okay, is wide. By implication, it means that if I want to start selling immediately it enters, it means I'll have to endure some drawdown before price eventually goes in my direction. So all we need to do now for indices is to wait for price to actually get back here, precisely get back here, for us to have a continuous to the downside, right? Now, please note, indices have a natural uptrend. Note, indices have a natural uptrend. I would any day, anytime prefer to buy than to sell, right? I would prefer any time to buy than to sell. Now, that means if at all price breaks this massive level here, then we start going bullish, right? We start going bullish. That means we start buying. There's a change of character in the market. So we need to now look for our entries for buy. But for now, price is bullish. We are just following what we are seeing on our charts. As simple as ABC. Okay. Let's say one more. US 30, the same thing. Pretty much the same thing. Okay, you can see price is massively bearish. If we have time, I will tell you the conditions that should hold. Most times, nothing is ever 100%, but at least to a greater extent, the conditions that should hold for us to say, okay, we are now in an uptrend. Oh, we are still actively on a downtrend. Okay, still actively on the downtrend. So I think we'll call it a day here. This US 30 is still the same thing as US 100. The US 30 is still the same thing as US 100, still doing the same thing. Basically the same thing. All right, the same thing. All right. So we'll call it a day here. Hopefully we have a peaceful day. A very, very profitable day. So looking forward to seeing you again on this review tomorrow. Sorry, we are really out of time. But if you go back to this video on YouTube, you listen, watch it again, see how I analyzed it, explain the strategy so you can understand it, apply it to any other chart. I think you'll be fine, right? Mr. Francis saying something.
Yes, sir.
All right. What's the challenge, sir?
Yeah, thank you, sir. Please, I want to take you back to US 100.
Okay.
Now, you told us about the bullish move. Can you
Yes.
please explain before you go the fair value gap created by the up of yesterday and today? How do we respond to that?
Okay. So this we won't call it a fair value gap again, but this is more like a gap up. There's no other further reference. Fair value gap is slightly different from this gap up that I've seen. Yes,
Okay.
sometimes price can cover this gap. Sometimes price does not necessarily need to cover the gap. It depends on where price is going in the long run. It's more like you are going to, let's say you are, I don't know, let's say you are traveling and along the line you find a shortcut, that can help your journey move faster. That shortcut at some point might look like you are going back to where you're coming from. What is the shortcut? Okay. So what I'm trying to say now is that this gap is sponsoring price need to go all the way to this point here before coming back to the downside, because price needs to come back down as explained. I think, where's the US one? Was this the one I used to analyze this? But the one I did the big brother, small brother. Let me use that to I don't think it's this. I think I have a couple of US 100 on my charts. Okay, exactly. Good. So price wants to go back to the downside. But first, it needs to go to this point. This is where we are safe selling it. Price needs to go as high as this point before it drops again. So this gap is just sponsoring that movement. It's making it faster, right? The earlier price gets to this point, the earlier it gets here, the earlier we'll experience that massive movement. So hence, when this gap to the upside, it will most likely not come back down to cover it before continuation. It will just gap, continue all the way here before you experience a massive fall. Now, check this out. Look at this too. It gapped, got here. It didn't come back down. It gapped, pushed it all the way to this point before we start seeing this downward movement. And when it was delaying, it gapped down. It didn't cover it back again before it kept pushing to the downside. So it depends on where price is going to or where it's coming from. So that's about gap. If price, for instance, let's say this gap was not up, it gapped to the downside. If it has gapped to the downside, there's a very high tendency that it will go back to cover the gap because it has not gotten to this point here before it starts to fall. So the gap just, there was like a temporary setback. It will cover the gap and continue. Gold did a gap. Let me see. We had a gap on, right? We did, yeah, we have a gap on. We had a gap on. You can see. Gold gap down. Why? It's trying to get to this point. So it gap down to this point, quickly covered the gap. Simple. Now it felt, oh, it has not gotten enough momentum, came back here. Now before it can start working its way back up again. So that's what I'm trying to say. The gap should be in the direction of where overall price is going to. If it's in that direction, then it might not cover it. But if the gap goes against the overall direction of where price is going to, then it need to cover it back again. I think my explanation, if it suffices, all right? So thank you very much for your time this morning. Looking forward to you having a very profitable day. See you tomorrow. Thank you so much.